All right, everybody. I wanted to do a quick little market update. It's been a while. Really not much has happened. As you can see, kind of bounced between 25 and 30,000. Like I've said this whole time, this has to really hold above it for a while, to have any significance. This isn't really the way that I wanted to do it. The audio probably isn't the best, but done is better than perfect, right? So let's go and get into it. It is October 27th, and I want to kind of dive into what I'm seeing. You got this nice run up here, and why this significant, really big, move to the upside. Why, it's causing me to say, okay, great. Now it's time for conversation. Now, really what I want to do is I want to see it hold for like a week or so. But kind of like what we were observing over here, right? It wasn't quite holding that. It just couldn't quite hold it. And I was like, I'm not 100% convinced. And really ultimately kind of sold off. Well, this one's a little different just because of the move up. Now, like I said, a lot of this move right here looking at the Bitcoin chart is simply due to, I think it was Cointelegraph announced that the ETF was approved that the BlackRock Bitcoin ETF was approved, which would mean a ton of money could come into the markets. The problem is it was a fake announcement. They took it down and then put another article up that said allegedly approved, which clearly is not the same thing as approved. But with that being said, when it went up about $35,000, I didn't think it would actually make it to the top, closer to 36. But at the end of the day, I thought $35,000 might be, closer to a short. And so I decided to really go ahead and take that on the perpetual charts, which, a different chart means that the price action is a little bit different. But anyway, my point is that the reason that it's become interesting is because this was fake news going up, and typically based upon that, as it gets corrected, well, you really see a pretty big red candle. Like, hey, oh my gosh, this happened. Oh wait, never mind. They lied and they don't know what they're talking about. That's what we're expecting. That didn't happen. This next day, continued buying pressure, which is pretty common from a retail buying standpoint. People just don't know what the heck's going on. And also normally I get text messages, which is comical. Really like these 2 days I was getting text messages, hey, should I get into Bitcoin? Which also tells me that retail is, these are people who aren't in Bitcoin, and they're asking me out of the blue, which, some of us haven't talked in forever. And it's like, if you're asking me, then the retail buyers are still there, and that's okay. And so they're there, people are selling into it, but this is where I was looking for the sell-off. These big wicks right here really tells me there's selling pressure, but really I want to see way bigger wicks on the bottom. And I'm not seeing it, which means there's still a lot of buying pressure and that the sellers just can't seem to get this off. This is actually starting to form a little bit of a very bullish pattern, where we see, this right here. The very next one is higher. It's, this is the next basically highest low. So it's kind of creating this angle right here. And that's going up. But at the top up here, it's stopping here. It's stopping in the same spot. It's stopping in the same spot. And so if we're going to continue that journey, and this is going across the top through this little channel, and it can't get above this area, but it's getting higher and higher here, kind of forming this little triangle pattern straight across the top and then diagonally. It's pretty bullish, and it's just consolidating on the way up until ultimately it breaks out. It's typically what happens, which means we might go up to like 38, 39, 40,000, etc. But before we get there, let's hold our horses and let's kind of dive into a couple more things. Like I said, this is irrational buying, and so I'm really expecting a sell-off. But let me explain a little bit more what that might look like. So in the past, I talked about how these little circles right here, I was expecting a little bit more of a pump. And I think the last video I made was talking back over here about how just like, whoa, that happened faster than I expected. But as you can see what happened, this is actually a good example of what I was referring to a little bit earlier, which is like, hey, big sell off. Oh, wait a minute, bid, buying it up, and then, oh, big sell off. And so these are kind of reversal candles. And so the bottom line is it's like, okay, well, we can basically ignore this, but this is now doing what I'd kind of hypothesized might happen over here. And I'll explain really some other things. You can even go back to my videos back in like April, May, June, July, and in a minute, and I'll explain how this formation, this structure was a little bit more predictable. Again, it's all percentages, so you just don't know which way it's exactly going to go. But when it does go up, I'll show you how we kind of came up with an idea on where it was going to go. But the bottom line is it starts to work its way up. Again, we expected that, but it should get rejected somewhere in this range, which it might have gotten rejected because if you zoom out, what do you see? You see really kind of like a channel. And in fact, let me see if I can actually just draw a channel. This could be kind of cool to be able to do like parallel channels. So what's really fascinating, I think, about this, if you kind of zoom out a little bit more and make it smaller, is, let me just do this. Man, I got to change the color on this thing. Maybe we make it like, let's make it something silliness. How about like a pink? And we'll turn this kind of like a pink too. Okay, so you see this channel right in here, right? It came down, is bouncing around, and there's really several channels within here, but just for this conversation, let's keep it easy. A channel just being like there's a top and there's a bottom, and it seems to ping pong back and forth between it, right? So if we copy that and we make another one, we could literally move that channel now up to, we'll put the bottom of this channel on the top of this channel, and then we'll move this down to where it was ping ponging around. Maybe this wasn't the right color. I don't really know. My point is that it jumps around ping pong, ping pong, ping pong, ping pong until it ultimately breaks out. And again, you can see there was a channel here, then there was a lower channel here, then there was back up here, right? But again, just really assume this is one channel for this conversation. And then here we are back again, 25,000 to 30,000, right? Bing bong, bing bong, bing bong, bing bong. Now, when it broke out of this channel, what happened? It went up, but it came back down, and it stopped on the way down. It stopped at the top of what was the previous channel. That's known as support. So if we're breaking out of this thing, and really let's just say, hey, maybe we're going up to $40,000. Okay, let's just do a little teaching lesson here. If we take this right here and we do the same thing all over again, right? Put the bottom of this on the top of this. This is a good example of really how the channels build into a bull market, right? Ping pong, where does it stop? Is it 40,000, 38,000, yada, yada, yada. But you can just kind of see the channel. So I've been waiting for a breakout of this channel, which you can move this any which way you want. I didn't count a lot of these wicks. I think $30,000 is such a round, strong number. I think it's pretty obvious that that is pretty strong resistance and pretty strong support. So all that saying, now if we get rid of these silly little made up channels that I just made to kind of teach that lesson there, really now what we're at is we're at a situation to where we have a couple of pretty strong areas. I'll tell you in a minute why it stopped up here. But if it was to keep going up, like I said, it's probably going to be in this range up here where you see a lot of this resistance over here. Let me get this out of the way. Where you see a lot of this little resistance over here. You know, we've had some consolidation here, consolidation here, consolidation. So it wouldn't be crazy if it stopped at that level as well. 40,000 also happens to be a very round number. But realistically, if it's going to come down, where is it going to go to? And I actually have a dotted line there, so this may not be the hardest question in the world. But if you really were to put a line right there, oh great, now it's pink too. Pink, purple, fuchsia, I don't really know. We'll make it orange, and I'll make it bigger. Okay, so really what's happening is you have this pretty strong support at 32,000, right? Meaning that if it's going to come down, again, for this bounce, I told you that if it goes up, it's got to bounce, it's got to come back down. Even if it's going to go up, like it's going to go to 40, 50, 60,000, what goes up must come down. So I'm expecting it at least to come down to this 32,500 range. And then if not that, obviously that's what this dotted line is it's an alert for me it says, hey, Brian, this is happening. And then really for here, I would probably say, yeah, maybe 31-ish, because I don't count a lot of these wicks. Again, this is just a personal choice. I choose not to. So I'd probably say 31,000. It's pretty freaking close to that. And then if not, I'm going to go all the way down to that round number of 30,000. So if I'm looking for the levels on the way down, this is really where I'm looking personally. Again, 30,000, 31,000, and then specifically on this one, 32,500, and that's just because of these highs over here. Oddly enough, where's all that consolidation? It's right in that $31,000 range, $30,000 range. So clearly, right in here, there's a good reason if it comes back down, it's going to come down to one of these levels, and we just simply have to kind of watch it. All right, if it comes down, it hits and breaks through this, and maybe it comes down and bounces, and then breaks down, breaks and comes down. Okay, great, it comes down, and then what happens from there? Well, really, from there, what does it do, right? And this is where we just have to be really, really patient. I've talked to some of you about patience and about how waiting really is how you can make a lot of money. It's literally just letting the market do what it needs to do and then getting involved, which is kind of my position right now. right? Most of you have known that I've been in a primarily cash position since way down in the $25,000 range, really even a little bit under at some point. And it's not that it's a big deal. It's just I really want to I wanted to prove that it's going to go above $30,000 for a while. I want it to go up, knowing that it's going to go up, so that when I do put my money in, I don't have to endure any big drawdown. I can just enjoy the profits and the ride up, right? And it really reduces my risk. But coming back over to this, if it comes down, wow, this is kind of hard to see now that I think about it. Here we go. If it was to come down, I want to see it bounce off of this. So I'm expecting it to sell off at least to here, and then ultimately bounce up and go all the way up, or come down and then break down. Now, if it breaks down, what's going to happen? I want to see a daily close, which on a red candle, here, let me just zoom in for a second. On this red candle, remember, on a red candle, the close is the bottom. On a green candle, the close is the top. So the green candle opens right here and it closes right here, and the wicks show you where it went during the day. So I want to see that the close is below $30,000 exactly. Now, if it closes below $30,000, especially if the next day is also closed under $30,000, then we're almost, I won't say guaranteed, but in my opinion, it's an extremely high likelihood that the only next resistance is 25. We have to come all the way down to this area right here. And I apologize for having such a messy chart at the moment, but I just kind of, when I get these ideas, I'll mark them on the chart so I can deal with them later. Like even sometimes I'm on a train or I'm driving or something, I'll be like, oh, I got to go check that out. So I'll just do it another time, kind of a thing. In fact, let me show you kind of how I clean up the chart. So really this little channel right here, we don't need that anymore. That's kind of invalidated. You can, interestingly, what's cool about some of the work that you have done in the past, you can start to see how really it becomes here's another point that it stopped at, and it becomes more validation, right? It just continues to be validation. Now, what does that mean? That means if it's going to come down, I'm expecting, and this is a little bit more of a speculative, like this doesn't really matter, but in this, I expect when it breaks through 30, if it breaks through 30, I could see a wick all the way down to probably this yellow line. And then if it's going to go back up, it'll get wicked all the way back up, right? So we'll see a really long wick, and then it gets bought up to 30, maybe closes above it, maybe closes under it, and that kind of tells me what the day is. So it's really just kind of an example. But that's that previous work, right? This downward channel, I really think that we could probably, or line, I'm pretty sure we can kind of get rid of that. And then I'm going to talk a little bit about the CME gaps as well, because that's ultimately where I figured out it was going to go when it broke out and went up. So the bottom line is we've been in this channel, we broke out, we've been in this channel, we just broke out. So with that being said, if that's the case, what's next, right? And, or more importantly, how did it stop here? And then we've talked a little bit about what's next. So really, we've talked about these summer lows being at 25,000. We've talked about that basically all year long. And then I've talked about these turquoise boxes being gaps, right? And that the gaps get filled most likely. In fact, actually, these are no longer gaps. These have been filled. So I can't remember what those are exactly. But I'm just a little flustered. But I'm pretty sure this is a gap. And in fact, I'll show you. Let's just look at the CME chart and find out. And before we look at the CME chart, why would I decide that it's going to go down around $35,000? Well, because like I said way earlier in the year, and again, you can go look at these videos from way back, I said that the gaps are like magnets, remember? And we've highlighted these gaps on the way down. This one has been filled multiple times. I told you about this gap right here, that it hadn't been filled, and it's around 20,000, 21,000. Here was a big gap, but it just got filled over here. This gap right here was really right around 20,300 up to, let's call it 21,000. And I've said there's the most likely scenario at this time in this range, if it doesn't hold 30,000, is we're going to revisit this. It's the most likely scenario. It didn't happen primarily because of this fake news. But what was up here? Look at this giant gap, right? It's just another gap. And let's zoom in. Let's get really crazy. Just so you guys know, like I don't have any special powers. This is just statistics. Look at this. It goes all the way up to the top of this gap. It fully fills the gap. And then what does it do? It sells off. The next day, it tries to break above the gap again. It can't. Same thing. And so it's getting now it's starting to sell off. Now, again, that's not on this chart specifically, that is not a deal where I'm looking at it from the standpoint of like, oh man, it's done. It's going to go way back down. It's definitely going to this gap. It's just one more confirmation for really what's going on. So when I decided to short it, it's because we'd filled this gap and I saw the close there. That 32,000 on this chart specifically is 32,000 or 35,200 something. On my other chart, it actually had, like if you go and specifically look at like this futures chart, you can see it went all the way up. Look at that, $36,003. So literally watch it, I'll go all the way up, which clearly fills the gap on my futures chart. So anywhere in here, 34, 35, $36,000 would kind of be ideal for me. Okay, so with that being said, I just wanted to kind of point out like, how do I do that? It's just the same information I've been saying all year long. I just waited, right? Same thing with this. Now, there's still a 10% chance that this is never going to get filled. A 10% chance, right? Great. I'm willing to play those odds, right? This one we knew was going to get filled eventually. Like Bitcoin will eventually be in the $30,000, $40,000 range in the future. So I wasn't worried about this getting filled. It just got filled early. Great. Let it happen, right? That's just one more confirmation that lines up with some of the support and resistance that we obviously see over here. Obviously, the dominance of Bitcoin is growing as well. Dominance is, I should have gone to that chart first. The dominance of Bitcoin is really what that means is how much out of all the money that's in crypto, totally, like all the coins, all the tokens, Bitcoin, Ethereum, everything, you know, it's saying right here, 53.96, almost 54% of all the money in crypto is just in Bitcoin. That's what this says. And really the dominance chart is a little bit interesting, in my opinion, solely because, again, it just shows you where the money's going, right? So if I was to zoom back in, I've got some lines over here. Again, what is it doing? It's just this channel, right? The dominance is not the Bitcoin price. It's really all the money moving in. So it's going to reach certain resistance, like where this red line is. This was support, bounced off and broke through it. Now when it goes up, I'm expecting it to go where? To probably $57,000. I'm sorry, 57.5%. And really once it gets there, I'm expecting Bitcoin dominance to go down, which means the money is leaving Bitcoin and it's going into altcoins. Now, when you look at the total market cap of cryptocurrency, really we see a little bit of a move up, but really it's just this little space, right? This is Bitcoin, Ethereum, every single coin, it's all in this one little space. Well, I don't see a big breakout here. So that just means that Bitcoin was the only one that broke out. In fact, this total too is the entire crypto market, but you take Bitcoin out. So this is all the altcoins. Where's the breakout? So there's no bull market that's happening, right? I don't see this happening. This says bull market to me when this big run up like this. I don't see that happening. This is literally just continued consolidation. We haven't even broken out of this. If we got a total 3, which is removing Bitcoin and Ethereum, it's the same thing. So we're not in a bull market. That's not what we're in. The others is, you know, it's just the altcoins. And we are starting to see a little bit more of a triple top here, right? We've you know, come down, we've come up right here, it stopped right here, hit resistance again right here, hit resistance again right here. We don't know what's going to happen here. But again, these are tiny little altcoins. We don't need to worry about that at the moment. Right now, we really are focusing on this. But my point is, do you buy Bitcoin? Do you not buy Bitcoin? You always buy Bitcoin. It's just a matter of how deep do you go in. I personally don't believe that we are in a big breakout to where, hey, it's all over, it's all said and done, it's game time, bull market's on. And I say that because, again, when I looked at some of the totals, total 2, total 3, others, I don't see movement. I just see money's going to Bitcoin, and that's because of this ETF news. So lastly, this is on the weekly chart. The other thing about this is there's 1 day and 20 hours left on this chart. The thing I've been waiting for, and this was down here a little bit earlier in the $33,000 range, I was thinking, oh my gosh, this is going to, on a weekly basis, look at this giant candle right here. It's going to sell off down to $30,000, isn't it? And what would that mean if this was a giant wick? That would be some people call it a topping tail, like that's a more common phrase right now, but this is also known as a shooting star. A shooting star is a very bearish candle, which means this giant wick sold off for the week and chances are probably coming down. So really the bigger the time frame you go to, really the more information you can know. And that's what's kind of cool about it, right? What's really bananas about price action too is people are like, hey, should I get in? Should I get out? It's like, dude, if you had bought the very top, $69,000, and every single week, whatever your dollar, $10 a week, $100 a week, whatever your dollar amount is, if you would have just bought every single week, coming back to the weekly chart here, without missing, you just say every Monday, I'm going to go buy my $10 Bitcoin and been consistent with it. Look how little time was up here. Look how long down here it was down here, right? Your average right now would probably be $25,000, and I think the number is actually less. I think it's like $23,000. Your average, if you got into crypto when it was the absolute tippy top, And just every single Monday or Tuesday or whatever day of the week you pick, with whatever dollar you pick, you just stayed consistent. You would have been accumulating way down here a lot, which makes your average somewhere right down here. So dollar cost averaging is a really great way to do this. It really reduces your risk, of course, but really at the end of the day, we are where we are. I'm a trader, so I care more about price action, but I've been sitting through a lot of this stuff, right? I've been placing trades, in perpetual, futures contracts. So I can make money and cash flow from trading. But as far as like just buying and holding, I have not decided to do that yet. And that just is simply based upon the risk metrics that I'm comfortable with. And everybody has to kind of decide that. So lastly, I'll really kind of point this out. I think I might have been going somewhere else and I've just gotten distracted. Surprise. That's what it's like to be on a video with me. But if I was to extend this out, right, is you kind of have some support here, you have some support here, you kind of have some support here. We broke this support down. And really, normally you would hit it here and it would come back down and we would ride it up. Now that we've broken through, we might actually see it hit this level. Oddly enough, what's that range? Here, let's zoom in. Let me just show you. Now, again, I just drew the line. You can move this a little bit here and there. But again, just to give you an idea, in this example, it's saying on November 3rd-ish, we should be around 32,500. And if that's the case, if it bounces up, there you go, right? Now we're on the top of the line. And that's just the trend. The trend continues to go. And as you've heard me say, the trend is your friend. So I've made this video insanely long, but hopefully it gives you a little bit more of a clear picture of what I believe is going on in the market. And like I said, we've kind of got this bullish consolidation accumulating, ascending up to this $36,000, $35,000 range. Really, if that continues to happen and we end up, in 6 days still up here, I'm going to be like, dude, this thing's going to break out and it's going to go up. It's going to go up to a new level. Well, here's your next support and resistance, your major support around $38,000. So it really wouldn't surprise me if that's the level we hit. $40,000 again is a pretty heavy number. Obviously, pretty strong support right in here, right in here, right in here, right in here. So plenty of opportunities to prove $40,000 is a strong range as well. So $40,000 really wouldn't be a shocker for me if it goes up. If it comes down, like I told you, 32.5, 32,000. 31,000, then 30,000. So 32.5, 31, I'm not even pointing in the right freaking area. 32,500, 31,000, then 30,000. And then really after that, probably this 28,300. I don't know why. It's just, man, there's so much confluence here. I just like it. But we'll see what happens. I think if it closes a daily close, again, remember on the daily chart, if a close goes below 30,000, I'd feel pretty confident that moving forward, you're going to be looking at a $25,000 bounce before we, boom, start to take off. I really don't think that would probably be the final thing. In a recession, I think I made a comment about that. In a recession, what do I think is going to happen? Again, $25,000 will probably be tested. Possibly this gap will get filled. Whereas before this big breakout, I would have said that this gap is going to get filled. More likely than not likely. But in a recession, I think we could end up at these lows, down here, the 15 range, and most likely either a double bottom, which means another 15,000, or we do a big spike down to like even 10,000, 12,000. And I say that based upon the pandemic, which was over here-ish. And this is really what I'm talking about in one day, right? Hey, we're trading. Here's the bottom of the range right in here. And it's just like, boom, whoop, buy back up. All right, let's get back up there, right? And that was obviously an anomaly, but you kind of get the idea. So that's where we're at for today, here at the end of October. Subject to change every single second of the day. But, this is a pretty good idea of, the reason I don't make a lot of these videos is they're just going to be repetitive, like I showed you the CME chart. Like, how long ago did I map that out? Like forever ago. So, I want to see it form a channel from a long-term wealth building perspective, which is clearly what I've talked about on this channel. I want to see that. I want to see it prove to me it's going to actually be going up, and then great. I don't care if I buy at 38. I'd rather buy at $38,000 and then it goes to 100 grand than buy at 34,000 and it goes down to 25 grand. And I got to get stopped out and get my cash back and hope, you know what I mean? Like for a long-term wealth building play, that's just it. The only other two ways to do it are like I have talked to my own mother about, which is, look, do you have the money to buy Bitcoin right now? Do you want exposure to Bitcoin? Great, buy it. And then forget you have it for 10 years or 12 years or 20 years or something, right? Or the second plan being just start setting aside every single month. I want to spend this much money. So just to keep the math easy, I want to spend $400 every single month. Great. Then set an automatic buy purchase on Coinbase or something, even though their fees are ridiculous. Just literally set it up to buy that $100 every single month or every single week, I apologize, or month or day or whatever you want. Just set it up and forget about it and just let it accumulate. And that way, if Bitcoin goes to zero, this is an amount of money that is not going to ruin your life, right? So it's a way to be speculative but manage your risk. So I hope that helps. I appreciate you guys for all the encouragement and the support. I really enjoy trying to help the best that I can, trying to provide some value. These are just my opinions, guys. I could be 100% wrong. Bitcoin could go to $1 million tomorrow, and what the heck do I know? So, but this is my own personal analysis. Do your own research, and happy investing. And I look forward to building wealth with each of you as we move forward. Take care.